On March 18th, 2024, something strange happened in the silver market. Prices surged, headlines celebrated, and analysts rushed to explain why silver was rallying. But buried underneath the price action was a far more important question. If silver is truly abundant, why are mints delaying deliveries, vault inventories shrinking, and industrial buyers quietly locking in long-term supply contracts? Tonight, you're not going to hear hype. You're going to see the structure behind the move, and why the word shortage doesn't mean what most people think it means. Let's establish one critical distinction. A deficit is accounting. A shortage is physical reality. Since 2021, the silver market has run a structural deficit every single year. According to the World Silver Survey, global demand has exceeded supply for 5 consecutive years. In 2024 alone, global silver demand approached 1.2 billion ounces, while supply struggled to exceed 1.01 billion. That gap did not disappear. It was filled by inventories, and inventories are not infinite. Pause. This is where most coverage stops, but the real story begins after inventories start doing the work of supply. Here's the uncomfortable truth. Over 70% of all silver is not mined for silver. It is a byproduct. Copper, zinc, lead. That means silver production does not rise just because prices rise. If copper demand slows, silver supply slows with it. And since 2016, global silver mine production has been flat to declining. Ore grades are falling, energy costs are rising. New mines take 10 to 15 years to develop. This is not a market that can respond quickly. Pause, which means every ounce demanded today is competing with tomorrow's demand. Now, here's the pivot most investors missed. By 2023, industrial use of silver crossed 50% of total demand. This was historic. Solar panels alone consumed over 160 million ounces of silver. Electric vehicles, 5G infrastructure, AI data centers, defense electronics, all rely on silver's conductivity. And here's the key difference. Investors choose silver. Industries require it. A factory does not care about spot price narratives. It cares about continuity. So when supply tightens, industries don't sell, they secure. That behavior changes everything about how shortages form. This is where the market quietly began breaking. COMEX and LBMA vault inventories have been falling for years. But what matters isn't total inventory, it's registered deliverable metal. In multiple periods since 2022, deliverable silver has represented less than 40% of reported stocks, meaning most silver exists only on paper, not on trucks, not in transit, not available when demanded. And when inventories begin doing the job of mines, the system becomes fragile, because once trust breaks, price stops being negotiated. And now comes the most misunderstood question in this entire debate. If silver is so tight, why doesn't price reflect it yet? The answer has nothing to do with demand and everything to do with market structure. What if silver isn't rising because of hype, but because the system is running out of time? Comment, silver structure, and subscribe, because next we are breaking down paper pricing, China's role, and whether buying now is rational or dangerous. If silver is structurally tight, if inventories are draining, if industrial demand is locked in, why hasn't price already exploded? The answer lies in how silver is priced. Silver is not priced primarily in the physical market. It is priced in the paper market. Futures contracts, derivatives, unallocated accounts. For every single ounce of physical silver available, there are dozens of paper claims. This creates an illusion of abundance. As long as contracts can be rolled, settled in cash, or deferred, price remains managed. Shortages do not show up first in charts. They show up in delivery stress, delays, premium spikes, quiet sourcing agreements. By the time price reacts, the shortage is already mature. Now we introduce a force most Western investors underestimate: China. China is not just a consumer of silver, it is a strategic allocator. In recent years, China has aggressively expanded solar manufacturing capacity, EV supply chains, grid-scale energy infrastructure, all silver intensive. At the same time, China has reduced exports of key industrial materials and increased domestic stockpiling, not through headlines, through policy. When a nation secures long-term supply contracts, that silver does not come back to the open market, it disappears. And when multiple nations do this simultaneously, the shortage becomes geopolitical, not financial. Now we confront the uncomfortable question. Is this the moment to buy silver, or is this a late-stage rally trap? Silver does not move in isolation. It responds to real interest rates, dollar strength, risk sentiment. Historically, silver performs best when rates stop rising. Liquidity stress appears. Confidence in paper systems weakens. What we are seeing now is early alignment, not confirmation. That distinction matters. Early alignment rewards patience. Late confirmation punishes emotion. This is where most investors fail. They confuse structural truth with timing precision. So what is the rational response? Not hype, not fear, not prediction. Framework. Silver is not a trade. It is a position. If you believe industrial demand is irreversible, supply is structurally constrained, inventories cannot replenish quickly, then silver becomes a time asset, not a timing asset. Buying aggressively at emotional highs is dangerous. Ignoring the structural shift is worse. The Stoic approach is layered exposure, accumulation without urgency, conviction without leverage, because the greatest risk in silver is not volatility, it is absence. Every commodity shortage follows the same arc. First, denial. Then, stress. Then, repricing. Silver is transitioning from stage 1 to stage 2. When stage 3 arrives, price does not ask permission, it gaps. And by then, the debate is already over. History doesn't reward those who react first, it rewards those who understand first. Silver is not running out tomorrow, but the system that prices it is already running out of margin. What would you do if the shortage becomes undeniable before price explodes? Comment Silver Reality and subscribe, because the next episode exposes who controls silver pricing and what happens when they lose control.